Hello everyone, I'm Mark Zane and welcome to Zane Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 34 of the Forex market review. Today we're going to take a look at probably about 5 charts just to see what's happening with the market and where they may be going. So I'm going to skip through these charts fairly quickly so we can cover them off in the required time frame. But please go ahead, pause the videos and rewind and whatever is needed to make sure that you understand what's going on with each chart and to see if they fit in with your personal trading plan. The first pair we're going to look at is the USO USD. So this is the US oil market, and then currently you can see it's had this big push back up higher. And if you haven't been listening to the news, you would notice that Saudi's looking at having a ceiling level, trying to come to an agreement with everybody of where they can lock in a price, and that saw the price drive from around the $40 mark all the way up to almost $50. So that was a good push up, but as we've heard it many times before, everyone comes to the table, but nothing really eventuates. So we're starting to see a bit of pressure pushing it back lower. So the bulls are starting to exit a little bit with the sellers locking in, getting in. So the bulls are jumping out, locking in some profits. But we can observe on a chart, so we switch to the 4-hour chart, we can see a wave pattern. And if you can see this first large AO, and if you follow the rules, we determine that to be wave 3. So if we go ahead, drop some numbers in on the chart, we've got the start of wave 1 down the bottom there, push all the way up to the top. Then we have the wave 2 push back lower. Then we have wave 3, and we know this is wave 3 because we see this first largest AO. We followed all the way back to the beginning. That's roughly the start of it. And when it comes back to the zero line about that point, that's the high of it. And then we have our pullback for wave 4. And to determine how far wave 4 pulls back, we use our Fibonacci retracement tool from the lows to the highs of wave 3. We expect it to pull back to at least 38.2, and I like to personally see it come back to the 50% mark. So because if I look left, I can see the 50% mark is matching up with this 200 ESA line, and it's also matching up with some horizontal support areas. I'm looking at that around the 50% mark could be the place it will find some support. Now with this move down in wave 4, we generally like to see an ABC cycle. So this is A, followed up for B, and then one more move lower for wave C, with A equal to C. So I'll change that. That was pushing down for 4, which also includes the ABC cycle. So A, B, C, and how far do we think that will go? Let me just zoom in, grab our Fibonacci expansion tool this time. So we want to see how far it's going to expand, and then we just go ahead and drop those points on there. I'll go ahead and remove this retracement tool, which we think is coming back to that 50% level. And as you can see, that 50% level also lines up with the 100% expansion. So therefore that move will be equal to that move. And so with all those key ideas pointing together, that would be a good place I would be looking at going long on the oil again. So keep that in mind if you're looking at one more move, push for wave 5 higher. That's about the point I'd be looking in the market. And let me just put a wave 5 question mark there, just so you know, roughly around these levels here is where it should push back higher once it's popped down to about there. Now with the pound CAD, we can see we have 1, 2, 3. So all of this is wave 3 because it never come back to zero line, and pushing back for wave 4. Where do we think it's going to go? Again, use your Fibonacci retracement tool. We're looking to come back to about the 38.2% mark initially, because I've got this DSR indicator showing major resistance areas. I wouldn't want to look at it pushing much higher. On a 4-hour chart, we see divergence with our higher AO and our lower price. So because we have a lower low in price on high AO, we're looking at pushing back higher. On the 1-hour chart, it looks like we have divergence as well with our lower low in price and our higher AO again. So now we're starting to see it step back higher. This looks like an ABC push higher. So I'd want to see it come back to some type of support level, roughly around where this line is here. And if you can see it pull back down into those levels there, you can then look for another push back higher. But just remember, we're saying the first resistance area is probably a 38.2% fib, and this DSR level, you definitely would want to get out around those levels there. So if you're looking at strengthening on the pound and weakening on the CAD, this could occur over the next few weeks. It's just hard to tell. It could occur next week. But you just want to wait for your setups to come to you. Be a sniper. Let them come to you. Don't sit there duck hunting. Set up a trade and then wait for the execution. Comes down, test. If you can use a stop loss roughly around 150 pips, you can make 600 there. So you can easily risk one to make 4 times your money. So that's a risk $100 to make 400. Or you want to be a bit more conservative, go down the bottom here, maybe risk about 250 pips and go for 500, and that's risking $100 to go for $200. And both of those are very good scenarios. It depends how much confidence you have in the trade and how much you want to let it breathe on you. So and if this happens to be a wave 1, wave 2 can pull all the way back down to these levels. So you just got to be ready to see which way the market may go. So that's the pound CAD. The next trade setup we have is New Zealand USD. So starting on the daily time frame, this one we've been looking for the past week and a half. Again, we've just recently in the last day seen a new high. So we still have a higher high in price and we still have a lower low. So that one's still setting up for daily AO divergence. There's been no entry yet because it's still slightly stepping higher. We haven't even seen any break of resistance. On a 4-hour chart, we still have our stepping higher with our lower AO. So that's divergence on the daily, on the 4-hour, and on the 1-hour, we have it as well. Between here and here, lower low in price and the high AO. So pretty much got it on all levels, but as you can see, it's still stepping up. So you really want to watch the market break down, then come back up, retest the support, and ready for pushback lower. So if the US dollar starts to strengthen and maybe an interest rate cut in the New Zealand occurs, which is unexpected, then yeah, you could probably see this market drive heavily down lower. And if you're looking at risking maybe 100 pips, you can easily make almost 200 pips. Where do we think it's going to go? Well, I'd be riding it somewhere down to these levels down there. So definitely trying to go for 1 to 2, maybe 1 for 3. Zooming out of the market. Yep, definitely that first DSR support level looks like it would be a cracker of a winner to try to drive it down to. So everything's setting up for the New Zealand USD short, and hopefully that eventuates. We can also just draw some type of uptrending channel where we think it might go. That therefore you can see I wouldn't want to be breaking those levels there. Even if you were to draw it through there, you can see even if trying to break through this horizontal support in this uptrending market, you just be pushing too much out of the market. So just do your risk of about 100, 150 pips and try to make your 200 to 300, and that's a good risk to reward. The next one we're looking at is USD yen. Same with the New Zealand. If the New Zealand weakens and the US strengthens, this will be good for this trade because they're looking for a strengthening on the US dollar. So here, first thing we want to identify is the first largest AO. So we go back to the beginning, and that's the start of wave 3. So here we must have wave 1 there pushing down. Then you have your wave 2 push back higher, followed by the wave 3 push back lower. Remember, if you're trying to find out how far wave 2 can come, again, grab your Fibonacci retracement tool. Wave 2 always pulls back somewhere between 61.8 and all the way to the top, but not breaking the highs. If it breaks the highs of the start of wave 1, then you can cancel the trade. So this one's come down, it's broken the 61.8, almost touched the next fib level. We've pushed back lower. We then see wave 4 pullback. So to determine wave 4 pullback, we look at the wave 3 move. Minimum of 38.2 is where it should come to. It never came to there, and so it's just showing heaps of weakness. So that's would have been a no entry. You have to always have a rule, and if your rule is minimum 38.2 fib retracement, then you got to stick to that rule. So this one definitely wouldn't have been an entry. However, what we are looking for now is the lower low in price with the higher AO. So this is your 4-hour divergence. So now with that, we could see some start to push back higher. What do we want to look for? We want to look for a nice move up into these support and resistance areas, then back down to retest support resistance areas, and then a final push back up higher using this DSR level as an area where it should first likely struggle. So if you're looking at risking probably something like 150 pips, up here you can make easily 600. So there's your 1 to 4 risk to reward. So you might want to I don't know, maybe take a bit of a more riskier move. You might want to be a bit more conservative. You've definitely got a lot of play in there, but just remember these DSR levels is where it would go to. So if you can make your 1 for 2 or 1 for 3 prior to those levels, definitely look at taking that. But also, as you're stepping up on the charts and the 1-hour charts, just look for that divergence. If you're starting to see higher high in prices with the AO stepping down, that's showing it's getting weaker. So start looking for an exit opportunity, or at least bring your stop loss to break even. The final trade we want to look at is the USD 30, and that's the stock market in the US. Here we're seeing divergence on the daily time frame, higher high in price, lower AO. We then have 4-hour chart, which we can see divergence again, higher high in price with a lower AO. And then on the 1-hour chart, again, so that's pretty good. Daily, 4-hour and 1-hour all pointing to divergence. Higher high in price stepping up with the AO stepping down. As you can see, these AOs are stepping down. And they've got to be clear divergence, which means it's got to come back below the line before it goes back above the line. Back below the line and back above the line. So now we're looking at pullback. That's probably wave 1, pushing back for wave 2, ready for wave 3 lower, and should be looking around those levels there, risking about 1400 to make almost 33,000. So you're looking at 1 to 2 risk to reward that can occur on this trade, and that's just to this very first support area. And if it breaks those, it's going to definitely make its way down and probably bounce off this daily 200 EMA line. So thank you for that. That was week 34 of the market review. We wish you all your best in your success. Take care. Bye-bye.